Welcome everyone. Let me just get down to business. There are two types of trading, or there are four types. Basically, you can boil all of them down into long-term and short-term trading. Now, when it comes to a system, or when it comes to a trading strategy, it doesn't really, uh, every trading strategy has the way they function, but whether it's a long-term trading strategy or a short-term trading strategy has to do with the time frame, right? It has to do with the time frame. Now, everything we do, we work with time frames in trading. Okay. Now, when you're trying to trade, the thing about technical analysis is because it is uh, a limited form of analysis, you have to force your rules. There are four different types of analysis, and this is not an analysis class, so I'll just go straight to technicals. The fundamentals, the sentiments, the technicals, the intermarket. And technicals, because of its nature, it has to do with rules, right? So technicals has to do with rules, and you must enforce those rules to see profitability. Now, if you're tired of trading with luck and you want to see consistency, you want to actually take steps towards making your trading you good, mechanical, useful, your performance, you can measure your performance. Most traders are just trading. You can't measure their performance over time. That's why they are the same way they were when they started. But with technical systems and following rules, you can measure your performance. That's awesome. Now, let me share this with you. So I will show you, we have a rule for this system. This system, you can use it to trade both both as a day trader or as a swing trader. It's all about the rules and the time frames. What makes you a day trader or swing trader, apart from your personality, is the time frame you follow. This system is what is called the building blocks, or we call it the mana for short. For those of you that like fancy names, call it mana or you call it building blocks. It's a building block strategy and it's very simple. The goal is to help you trade with the trend. Let me zoom in so we can all see. The goal is that the system helps you trade with the trend. Now, if you've been trading for over half a decade, as I have, you would know that any system that does not help you trade with the trend can work, but the one that lasts over time is a system that keeps you in the direction of order flow, or you can call it trend. Now, I'm going to give a very practical example. Step by step, we're going to follow the checklist. This is the checklist. If you are with your book or your pen and paper, you write it down. If you are with your PC, you can take a screenshot. If you're watching this like Netflix, I'm sorry for you. Anyway, now let's follow the checklist. Now for the buy checklist, the buy setup checklist for Trendline, for the trend trades and for the building block is very simple. This is the goal. The goal is to resume the higher time frame trend after catching a clean break of the trend of the lower time frame downtrend. What does this mean? Let me explain. The number one says determine higher time frame buys. Now, if you've been trading for a while, everybody has what they look for, especially people who trade technical trade systems. Trade with both fundamentals and technicals, as you've seen in the group, but largely when the fundamentals are not clear. People would say, I have a system that when the market breaks this high and then breaks this low, at the retest, I want to enter. And this is how largely many people trade. And there's nothing wrong with it, with this. Only that in this type of system, you are largely limited because you're just working with one part of the analysis. If this is your first class, go watch the previous video. It's free on YouTube. You can get access to it. You know that this is only one part of the equation. There are three different parts we measure for a technical system, and this is number two. If you trade a chart pattern, if this is number two, that means you must find what number one is and what number three is. And we'll cover that now. Now, what this is saying is you will look for a market that you already know where the direction is going. How would you tell where the direction is going? It tells us here. It says use monthly, weekly, daily to determine if price is likely to go higher. Then how do you do that? You focus on what we call internal and external range liquidity. Now let me explain. This is very simple. Don't worry about it. What this is saying is you will move to a higher time frame, say the monthly, the weekly, or the daily. And what you're looking to do is simply to identify a market that has moved up and down. And then you decide based on the moving up or down where the direction is. So, for example, because the market is cyclical in nature, what does this mean? This means the market does not go up indefinitely and does not go down indefinitely. The market is cyclical. In fact, in business and economics, there's what we call the business cycles. We call it economic cycles. Market rotates in a way where it goes up and down and up and down. So when I am on the daily time frame, I'm looking for the market that goes inside if I expect the market to do outside. So external means outside, internal means inside. So this is very simple. On the daily time frame, we're looking for a market that goes out and in and out and in. Now, if you don't understand this, don't worry, we can talk about it moving forward. I just want to be quick and wrap this session. Now, once you're done with the higher time frames, and you've decided, if the market has done inside, which is internal, relative to the last range, you expect a movement to the upside. You expect it to go external. If the market has done outside, what you want is a market that will return inside. This automatically means that you are now looking for sales. Don't get it twisted. The market would buy if I expect it to go external, and the market would sell once the market has done external outside and I expect it to do internal. The same is true for a bullish move. The same is true for a bearish move. Right? If you don't understand what I'm saying, don't worry. It's because I'm introducing it for the first time. It will make sense eventually. So if it did inside, it should do outside. If it do inside, it should do outside. That's all it is. If the market is now outside, what do I expect? I expect it to go inside. This automatically makes me a buyer. Very good. You're getting it. Now that I know how internal external range liquidity works, we go to the next bit of the next part of the trading, and this involves this frame. Now let me move to the second one. You drop to the lower time frame. We've decided buyers, for example, and let's say we want to sell based on external internal range liquidity. I'll give you a practical example. For those of you that saw me trade the NASDAQ today, this is exactly what I used, right? So I will put it up there. We will show an example using the NASDAQ, exactly how it played out. Now, look for clear downtrend that goes against the higher time frame bias. What does this mean? So let's say we are looking to buy the market. You are interested in buying. You did not start here. You started by going to the higher time frames to tell you where to buy, or to tell you whether you are a buyer or a seller. Now that that's out of the way, before you buy, the instruction, the strategy says you want to see a market that does a downtrend. Before you buy, you will see a market that does a downtrend, which means that I am looking to buy, but before buying, I am waiting to see a downtrend. I know this does not make sense, but of course, this is not what you are used to. This is what works. Trust me. Now, second instruction says, trend must respect a trend line with 2 to 3 clear touches. Then it now says, ensure that, it says ensure there are at least 3 lower lows. We call it drives. That's where we got the name building blocks. The system is a building block pattern that are formed. What does this mean? Very simple. This means that, let me remove this and do it again. It says I want to see a clear downtrend. What is a downtrend? Lower lows and lower highs. If you don't know what a downtrend is, I sent a video on market structure. Go and watch it. And then it says it must have given clear touches, at least 2 to 3 for a trend line. And then you must have seen 3 drives. Where is a trend line? A trend line is a line that is drawn to mark the trend. That's what the trend line is. It's very simple. There are ways to draw this. I will teach it in future videos. I'm introducing this. You can't get everything in one video. If that was possible, everyone would be doing it. This takes a lot of hard work and patience. This will get you there faster if you pay attention to this. Frankly speaking, you are the first set, so I'm giving my best. So this will get you there more faster than any other thing would. Trust me. You want to see where the market touches the trend line at least how many times? 2 times, 2 to 3 times. So we'll look for like this. This is like a touch 1. Okay. Then we have another one here, 2, and this is 3. So once the market touches it 3 times, this means that we have an opportunity to buy, but that's not only that. An opportunity to buy, but that's not only that. You want a situation whereby, let me use this instead. The market does 3 drives. What does this mean? It drove down 3 times, like it built down 3 times, at least 3 times, not 2, 3. Follow me carefully. Technical system is all about rules. Why is this very ugly? Okay. 3 times. Good. So you want to see a situation where I prefer circles, honestly. You want to see a situation whereby it has done 3 times. When you see this, I will show you. This is the beginning point. The circle is too big. When you see this, this is the beginning point of the trading system of your buy. You now have a reason to buy, right? That's what this is. Well, now what's the next thing? You go back to the rules. This is how you check. If you want to be profitable, you must follow rules. Wait for trend line break. After that, wait for price to break above the trend line. Wait for a retest off the trend line. And then from a retest from the trend line, that's from above going down. It says, do not enter on the break alone. Wait for confirmation. And this is what this is. Now, if you think this is, oh, it's a trend line strategy, and you don't want to listen or you don't want to follow the remaining steps, go and trade it and you will see for yourself. Trend lines alone, they work, but not all the time. And apart from that, you need to add these things I'm teaching you. You know this. Many of you know that you've tried trading trend lines before. Has it been profitable for you? No. Trend line is not the magic. The magic is everything. Every part that you add to this. And then when we teach psychology and you merge them together, you will see powerful results. But don't think, oh, I found it. I'll start drawing trend lines. You will suffer. I didn't start here. So most of you, your challenge is when you see a trend line and the market breaks out of the trend line, like this, you jump in. This system says, wait for a retest of the trend line. But sometimes it doesn't come back to the trend line. And we'll show you where it will stop at when it doesn't come back to the trend line. But you must wait for it to drop, and then we must trade with confirmation. Only this will not make you profitable. Now, what are the confirmations? Go back to the rules. These are the things you will master to the point where it becomes second nature. And you don't even have to look at the checklist again. You have memorized it in your head. It says entry, you wait for a rejection candle. That's one confirmation. This is what will tell you to enter. A rejection candle is what people call a pin bar. Other people call it a hammer. I don't care what you call it, just understand what it is. Or you wait for an engulfing pattern that appears on the retest. Now, let's go back. Apart from that, it says a fair value gap. If you don't know what a fair value gap is, just let us know in the group and we will send you a link to a video that teaches fair value gaps, right? So you can use it. It says, wait for a fair value gap and then let it be present and you'll see price rejecting from the fair value gap. The third thing says, don't worry, I'll show you live examples. We took trades with that today. Don't worry. The previous low is now acting as a support. This is an added confluence. What does this mean? Very simple. I know I'm rushing. Please bear with me. I will cover that. I mean, it's very late. And I mean, I have to go home and eat. So yeah, just bear with me. Now, what does this mean? After the market breaks, where this break happened, let me remove this. Where this break happened, we want to see a fair value gap. Does this mean fair value gaps will show up all the time? No. But what do we want to see? We want to see a fair value gap as confluence here. I'm sure many of you did not know this before now. We want to see a fair value gap as confluence here. When that fair value gap appears, we use it. Now, if the fair value gap does not appear, what do we want to see? We want to see a level where there is previous, what do I use as an example? Previous, say, a resistance. For example, we have a market that trends like this, and then it breaks. This market, when it comes back to this level, say there is no fair value gap, we will use that as previous resistance to now act as support for our trade. So we'll mark this as and use it as confluence. If there is now a fair value gap here, better, an added advantage. So we have previous support on resistance, so we will call it break and retest, we call it breaker block. I love all the fancy names, but understand what it is, and the fancy names would not matter. Or you can even name it whatever you want. Some people call it the ABC pattern. Some people even call it the lightning bolt. They call it lightning bolt, I mean, because it's shaped like a lightning. So, I mean, call it whatever you want, right? I'm interested in you understanding it. So the market breaks, and then you retest, right? And then, wait, hope you're following. If you're following me, send a message to the chat. Do not unmute your mic, please. Do not unmute your mic. Just send a message, and then I can proceed. Right. So far, I understand. So far, I don't understand. I don't understand. I'm confused as hell. Send anything. Send your messages. Right. So finally, when the market trades into a fair value gap like this, what you want to see is a rejection candle. I like the name rejection because it makes sense, right? This is how building blocks strategy works. You want to see a candle where it has times the weeks when it trades into that fair value gap or that breaker or whatever you call it. You want to see a situation whereby the wicks are times 2 the body. The wick of the candle is times 2 the body. This is exactly what you want to see when the market is trading to that level. If you see this candle, 1 of it is fine, 2 of it, 3 of it is fine, enter your trade. With all these things on your side, you have a buy scenario. So you now see how I built up into this. You see how I built up into the system? It's the same thing for yourself. We start with having a sense of direction. Most of you now, after I teach this thing, do you know what you do? You are going to go to the 1 hour, 30 minutes, 5 minutes, and this is what you'll be looking for. You just be looking for anything that has a trend line to trade it. Oh, I'm looking for a market that is going down. This is scenario number 2. You've left scenario number 1. You just be okay. I'm looking for a market that is trending down, and then after the market trends down, I'm waiting for it to break. After I break, there are many times where trend line fails because people forget directional bias. If directional bias is something you are confused about, I will do a separate video focusing on directional bias. Watch it 10 times and you'll be fine. Trust me. Most of these things, we already know them. It's just repetition. Repeating them soaks them into your subconscious mind. And then it becomes easy for you to see it. Don't chase chart patterns. This trend line system I'm showing you is a chart pattern. You must start with direction for chart pattern to make sense. Does that make sense? Awesome. This is your entry criteria. If you see 1 of this, 2 of this, 3 of this, or if you see a strong candle that completely engulfs it, this is also another opportunity for you to enter the trade. Okay, so this is it for the buy. We just reverse it for the sell. Let me just give an example quickly before we proceed. Now, I'll give an example quickly using what happened in the dollar today. It's there. Okay, let me show you the one we actually traded. We traded the NASDAQ. Let me show you. On the NASDAQ today, we sold the NASDAQ. Why am I showing you an example? Because the market does not move in a straight line, right? It's so fancy to come and draw, look at the market going lower, low, and then, let's just find 3 drives. Do we have 3 drives? Yes, we do. Let's mark this 1 as 3 drives, 2 as 3 drives, 3, and then pull up a trend line, mark the trend line, and that's it. And then when we went for break, the market doesn't do this. If you know the market very well, it's noise. So it takes skill. It takes you to look at it over and over again to trade it. Now, this is the sell setup. This exact same way we were trading the bullish market is the way we're trading the sell for the NASDAQ. What does this mean? Let's go back to the rules, right? The rule said, okay, yeah, I did not talk about stop loss and take profit. We'll do practical example with the sell. Now, for the sell setup, it's simple. The goal is to continue to resume the higher time frame trend by after the market has done an uptrend, right? And then there was a clean break of the trend line. We want to go down. So the market will build. That's what building blocks is. It will build in the opposite direction of your intended bias, right? So we use the monthly, weekly for direction the same way. Then we will use external, internal to find out how we can, why I sold NASDAQ this morning, right? It's the same thing. After the market did a movement higher, the market did extend, the market did a trended up, excuse me, the market trended up like this, trended up, and then it had stretched. After external, outside, what would it do? It will do inside relative to the last range. Where is the range? From this high to this low, from this low to this high rather is a range. The market would drop. I expect a sell. So I didn't come to just blindly sell the NASDAQ because I'm looking for a trend line break. I expect the market to sell because it was stretched and did external. So I was expecting a sell from the higher time frame. I will show you on the daily. When the market stretched and then I went down to the lower time frame to look for a trend in the opposite direction, the market would do uptrend. That would do an uptrend in the opposite direction, an uptrend in the sense of a buy and a bot, and then I will now measure. It must do at least 3 drives to the upside, and it must touch the trend line at least twice. 1, 2, 3. Then it will break. When it breaks, it will create a fair value gap. If I don't see a fair value gap, I should see a break and retest pattern. The previous low, market should trade to it. When the market trades to it, the next thing I will wait to look for is a candlestick pattern. Once I find a candlestick pattern that the candlestick, the body is twice, the wicks is twice the body, pushing to the downside, then I have a good opportunity to sell. And did I see that today? Yes, I did. I saw that today and I sold the NASDAQ. Now you too can see it and you can make money trading this. You will not get it in one video. Watch the video again. So let's get into it. Let's start from the daily time frame, right? How did you know you were going to sell? I expected the market to come inside. Inside means I expected it to sell today. So the market has stretched outside. This is what I'm telling you. See a practical example. Market has stretched outside. Look at it. It does outside, inside, right? It does outside, then it does inside. And it does outside again, then it does inside. It's wrong. Okay. Outside, inside. And now it did outside. And trust me, I'm expecting inside. So since I expect a sell, what do I expect the market to do? I expect the market to drop down. Now, I will go to a lower time frame, say the 1 hour. And if I don't see it very well on the 1 hour, I can't find a trend line like this morning London session. I can't find where to fix a trend line. I will move to the 30 minutes. You now see that you're not blindly looking for, oh, where do I fix a trend line? Is there a trend line here? Is there a trend line? No, you are objective. I can't find it. I'll go to the 15 minutes. This is why it's a day trading and a swing trading model. You can use it for all. Good. Now I'm here, and then I'm looking at this uptrend. Before this happened, I'm going to mark this trend because this is an uptrend that led to a sell. There are many reasons why I sold. We also have this gap. At least 50% of the gap, I expected it to be filled today. Well, it filled more than that. So I will mark a trend line. and I will adjust it. Now you've marked the trend line. It has 1 test, 2 tests, right? You have 2 tests of the trend line, but you want 3. You are going to adjust to suit it. Now, apart from that, you also want to check the drives. Look above. Do we have up to 3 movements? Here we do. We have this one, 1, then we have this one, 2, and then we have this one here, 3. That meets our criteria that says we must have 3 drives. Go back. I'm rushing because of time. I don't want to have to go back and forth to look at the checklist again. Now, how many tests do we have? We have 1 and 2, and that's the only one we have. So we have to adjust this trend line to suit what we want. We want to see 3 tests, 3 of it. Boom. So that's what we have. We have 1, we have 2, we have 3. Let me zoom in for those of you that cannot see it. 1, 2, 3, 4, 5. The more the better. So we have 5 tests. The next thing we do is to wait for the market to break and retest. Go and look at the checklist. I know it very well, that's what I'm saying. When the market breaks, does it retest the trend line? No. Why? Because you don't need it to get there. You don't need it to get there. Where do you need it to go to? We have a fair value gap right there. Can you see that? That's a fair value gap right there. We're going to mark that. There's a low. If you don't know what the fair value gap is, don't worry, just let us know. We'll send you a video. Can you see that fair value gap? Beautiful. You now see that what you're doing is not magic. It's rules. You're following rules. Now, what else? We have previous low. This was a low support acting as resistance. Mark it. Mark those things. They act as confluence. So you mark this previous support that's acting as resistance. Can you see this? What then now gives you an opportunity to enter your trade? It's very simple. The next thing after all this checklist, we'll go back and you see that all the checklists are met. The next thing after all this checklist is that you want to see the candle engulf. Now, but here we have a sell, but it didn't engulf the other one. We wait. Now, you can clearly see how the market or what led to a sell. This is your entry trigger. Look at those things I spoke about. Multiple of them. 1, 2, 3, 4. Like they gathered themselves here. And are you surprised as to why the market tanked? Let me check so that I will not give a false statistic. Let me check my chart. I made everything I teach, however, must be done on a demo account. Nobody should trade live yet. Prove to yourself that this works. I know it does, but you have to prove it to yourself. One more example before we wrap up, since we are already here and I still have people who are in the group. Let me show you that this works on gold, because I know there are people who love gold here. So let me show you this works on gold. Now, this is the gold market, and the market today actually sold off. From when the market sold, let's look for today. Could we have made money trading the gold market today? Now, let's start from the daily. Follow the checklist. The daily should tell you if we are selling or buying. Well, from the market expanded higher, did external range. From which range to which range? From, let me mark the range with this. From this range or this range or this range to this high, to this range, this is external. Then it will do internal. Since it's doing internal and the market is heavily bearish, I expect the market to sell. I'm talking about today's market. If I expect the market to sell, this is for those who day trade though. What am I looking for? I will show you also swing trading example. I expect the market to sell. If I expect it to sell, I expect to see an uptrend against the market, against my direction. I will go to the 1 hour or to the 15 minutes, and then I will look for an uptrend. What does an uptrend look like? Higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. It's there, guys. It's there. It was in gold today. I was in this buy, and when I saw this setup, I left it. I took this. I took a small profit from the gold, went into the NASDAQ, and I left it. You were there. I didn't hide anything from you. It's there on the chart. So you can see up, down, a trend that goes against your direction. Then what are you looking for? You want to mark a trend line. You will look for the points that has the best touches and align it there. Don't force it. You will see it. If it's there, it's there. I have one here. How many touches can you see? 1, 2. Let me quickly mark this. You can see them. Please mute your mic so we don't have to go back and forth. 2 touches. 3 touches. As in, the more the touches, the better. You want the one that has 4, 5. The more is the better, especially if you're trading the lower time frames. Do this exact thing on the higher time frame. You'll see it there on the higher time frames too. It doesn't matter. I have an uptrend. When I saw the market did this, I said, my setup for a sale has formed. I exited the market and I was done with the sale. What is the next criteria? You know, I didn't come here to start. I want to see the drives upward. How many drives do we have to the upside? It must be at least 3. 1, 2, this is 2, and this is 3. Now we have 4. The more, the better. We have 4 drives. What does this mean? This setup for a trend line break, if this market breaks this setup, I am on track. I can imagine I'm showing this guys this for free. When you people make money, come back and pay tithe. I'm just joking. Anyway, when the market breaks this low, right? What do you want to see? A retest. Okay. When the market retests, what do you want to see? A fair value gap to act as confluence. Can you see one here? That's a fair value. I don't know what the fair value gap is. Don't worry. We'll send a link to the group. Just ask that. Can you see that? For those of you that have in this meeting, you have found a strategy you can use for the rest of your life if you learn this. There are other parts so that you know how to spot a false trend line break, how to not be caught up before the move starts. I will teach those things. It's a mentorship. There is a curriculum. Will be done in like 2 weeks and you'll be good to go. I think less than 2 weeks. Yeah. Let me stretch this out. When the market drops, enters the fair value gap, what are we looking for? We want to see rejections from the candles. Can you see this? Rejection. As it touches the trend, can you see a rejection? That the wick is twice the body. Indecision, rejection, it drops. When it comes back again to it, what does it do? Rejection and a big candle that engulfs the former one. I think with this, I've done justice to today's teaching. What does the market do? Market drops down. Oh, I have to wrap up. The market drops down and then takes out the low. Now let me show you stop loss and take profit for a sell quickly now before we go. If this has been helpful so far, say helpful, and then we can continue. Stop loss and take profit. Now for your stop loss, after you've entered, set stop loss above the most recent swing high. If you're selling, then take profit says if you're a beginner, take 1:1.5. This means if you're risking $50, target 75 or highest, target 100. I'll teach this in risk management class in the next 2 classes we'll have. Then, or if you want to hold for a long time, or if you break even, I will teach risk management. Risk management is an entire world on its own. An entire world. Don't miss risk management class. Risk management is what differentiates professionals from gamblers. Don't miss it. Let me just show you where to put your stop loss. Start practicing this immediately. Right? So we have this. Say the market hits this, it meets all my criteria. My entry will be where? Your entry will be at that candle, and your stop loss will be where? Your stop loss will be above the high, right there, above the high of that swing high. That's what the instruction says. Take profit is what? You target 1:1.5. Look at this place if you don't know what that means. Target 1:1.5. Once you have it, for a beginner, exit. If you are, you've been in the game, you can tell trends, then you target the low of when the trend line started. For But many times or sometimes the market never gets there. Right? It's very simple. Take a screenshot, draw this, do whatever you can, print it out, let it sink into your subconscious. I would like to wrap the session now. And if you have any questions, I'm sorry, apologies, I can't give room for questions here. Just go to the group and send me question. I'll open the group for like an hour and you can send your questions there. So if that's okay. Okay, show us swing trading example. Okay. Let me do that quickly. Now, for swing trading example, your only difference is the time frames, right? So for a swing trading example, let me show you you use the weekly. For a day trading example, you see I'm using the daily. But for swing trading example, you use the weekly. The weekly is your best friend. You use the weekly. The market expands higher, refuse to go higher and does a wick. This is a rejection candle. That rejection is showing you sell. And this already gives you the idea of bearish movement. When you drop from the weekly, you go to the 4-hour. On the 4-hour time frame, what are you looking for? You're looking for a trend in the direction of the sell you now want to sell. What does this mean? You're going to look for a trend. Can you see a trend? This is a clear trend. So you are using higher time frames. That's all. You're not using the daily, the 15 minutes. You're using higher time frame. I can see a trend. Make sure you maximize the levels. If the 4-hour is not clear, if you are swing trading, you are most permitted to use the 1-hour. Look at it on the 1-hour, then you can adjust the time. Of course, this is permitted. This is permitted. The market is not a straight line. So I have a clear-cut trend line here, and I wait for a break. The market has traded through this trend line and has broken. When the market broke, what did it do? It created a fair value gap. But the fair value gap is far here from where I want to trade. So what do I use? I will use previous support and stretch it out to act as resistance. When your fair value gap is far, use previous support and stretch it out. So I will stretch this out. Now, also, if you swing trade, now you can see inside, it broke out, dropped off, never came back. But if you swing trade, you can use the 30 minutes. It's inside the strategy too. And if you swing trade and use the 30 minutes also, you would have caught this move earlier. Where? When the trend broke. Let me zoom in. So you see the swing trade, don't go to the 15 minutes. Only use the 30 minutes for entries. In fact, don't mark your trend lines on the 30 minutes. Mark your trend lines on the 4-hour and on the 1-hour and see it perfectly formed. You've never used trend lines like this in your life before. You will use it now. You have a market that breaks, and what does it do? It creates a fair value gap. Mark it. You know, see that we are not marking nonsense, right? We are not just, oh, I'm looking for the market. Where is the market going? You know what to mark. You will see that your chart will be clean because you're marking the right things. Mark it. What else are you looking for? Previous support turned resistance. Here. You're looking for a previous support turned resistance. We have this one. This was a previous support. It will act as resistance. Then zoom in. You will see your candle pattern. Perfectly waiting for you to identify it. There, hitting the trend line. Can you see this? Perfect. One. We have only one here, though, but this is more than enough. Fair value gap, previous support turned resistance, and then boom. You would have been selling gold for a long time. And when others are coming to do their daily catching, you're already a swing trader. This big move, you would have been part of it. Stop losses were above the last swing high. Let me tell you, I didn't cherry pick this. I didn't like, oh, okay, let me look for an example, and then let me show them that I know what I'm talking about. This is a random event. You can check this. Look for it on the GU, the EURUSD, the GBP USD. Look for it on any asset. I'm still studying it on derivative though, but it's on any asset. So this is 1:1.5. If you're starting around here, is 1:1.5. If you're a beginner, get out. If you are a long-term trader, or if you're like me that likes to dare things, although I like to partials, I partial a lot. I'll be targeting that low. And guess what? You would have been riding the wave to the downside. I saw this also The USDJPY, a guy posted today. When I saw it, I told him, I mentioned in the group, the dollar is on your side because I don't want to tell him hold your trade. When he said he's afraid, I was like, based on what I'm seeing, the market is heading higher on the USDJPY. Dollar is on your side. Can you see this? The market goes back to the beginning point of the trend line. Many times it doesn't, other times it does, but it's always as the this is a swing trading. This is what it means to be a swing trader. You might not get the, you might be patient, you might wait, you might stress and stress and stress, but once it comes, my brother, once that trade enter, you are done. You hold your trades for the longest period. If this was helpful so far, tell me helpful. Let me go and eat the dinner my wife has prepared for me. I will see you in the next class. Cheers and have a lovely evening.